Okay, folks, welcome to our post-swing trade review of Bank of America. We opened up this position on December the 17th. We closed it out on December the 31st for 5% profit or 87 cents per share. So a nice little gain for a couple of days worth of work. So why is it that we decided to go after Bank of America? Well, I have to be honest with you. I didn't expect to stay in the stock for only a short period of time. I had hoped that we would see a breakout on the stock as well as the XLF, which is the tracking ETF for the banking sector. Now, before we ever get involved with an individual name, we always want to take a look at the sector that it belongs to, the parent group. And in this case, we're going to just use the XLF, the financial select sector, the spiders. And you can see, strong uptrend. This is a weekly chart. We had broken out on RSI above this declining downtrend line. We have since pulled back, possibly setting up for a double bottom setup. We had a reversal on the week of the 15th when we opened up the trade, a bullish key reversal off of key support. So the markets were sending us a signal to start looking at the banks, that they may begin to outperform, especially if interest rates rise. So we took a look at yields. Yields seem to be rallying off their lows. So then we took a look at our preferred stock to trade, and that was Bank of America. The first chart we went to was a weekly chart. Why a weekly chart? It's because if we want to go long, we want to make sure that we have a stock that's in an uptrend. And ideally, that it's either A, broken out above a resistance level, or B, is pulled back and retested a support level. And the week of the 15th, we had retested the lower band of the rising uptrend channel. That gave us a great risk to reward entry point. Why is that? We knew exactly where to put our stop loss order, just below this lower band of the rising uptrend channel, a very low risk to reward entry point. So we could have risked a couple of dimes on the trade to book several dollars on a successful breakout above this resistance level. Now, we did break out and close above the resistance level last tested back in March. However, the following week, after we did make a new weekly high, we reversed. And I sent out an alert to my members, be careful. If we have what I call a breakout point failure, meaning the stock had broken out the week of the 22nd, only to roll over the following week, there would be a warning flag on the track, and a big one at that. So let's fast forward to the daily chart, and here's where we got long on this successful breakout above resistance, and we enjoyed this rally up and into the 18.21 level on December the 31st. So why did we get out? Let's take a look at an intraday chart. Well, starting out today on the 31st, we had a really nice setup going for us. We had an inverted head and shoulders setup. Here's your left shoulder, head, and right shoulder. On the 31st, we began to break out only to reverse. And that was our signal to get out, especially when it started breaking below these support levels. So we had our profits in hand. The markets were beginning to weaken. This failed breakout was a major concern, besides the fact that we knew that on the weekly chart, we were facing a probable breakout point failure. So in a situation like that, when faced with what could be a very, very bearish event, which it was, we booked our profits quickly, and thank goodness that we did. Because had we hoped, we would have witnessed a bearish engulfing. The following day, a hollow candlestick, which never, ever is good. And then we gapped down, and we would have lost all of our profits. So we do not hold out for the top dollar. When we see the markets begin to weaken, we see yields begin to decline, which is not good for the banks. We book our profits, move to the sidelines, and I am willing to get long a Bank of America once again. However, it needs to come down to our support level, and I'll go over that potential trade with members on our premium commentary. Folks, if you get any value out of these videos, if you'd like to get them in the future, please enter your email address. We hate spam too. You will not be spammed. If you're watching this on YouTube, subscribe to my channel, leave a comment. If you're watching this on Twitter or StockTwits, please follow me and send me a message with any thoughts. We'd love to hear from you. Everybody have a profitable trading week, and I'll talk to you soon. Be well.